Hello traders, it's Samurai Trader here. Welcome to this training session. This is a follow-up session from some previous videos I've done over the last few weeks on some tips and ideas on trading gold. But please remember, what I cover here is this is applicable to every other market, whether you be trading futures, forex, stocks. It really doesn't matter because the geometric pattern set up on all markets and all time frames. Have to excuse me that the board is a little bit out on the PowerPoint here, because what I wanted to do is get across more as much as a chart as possible in the screen, which we're going to be looking at in a moment. Please go to full screen. You'll just make it easier when we get to the charts in a moment. Bottom right hand corner. As always, I need to mention and bring up the risk disclaimer. There is a risk in trading. Please read the disclaimer in full, and let's get straight into this. First of all, I just want to bring up having a master day trading checklist. Now, I just quickly put this together, and what I recommend is that you have a one-page cheat sheet of all of the key setups that you trade and the tips. Now, this is just one I've put together, so you may want to alter this and have more key points down. And what I recommend is you only have on there relevant points to your trading plan or what you actually do trade. So I'll just quickly go through this. So I follow the gold, so you're going to follow the 34 EMA, which is basically our core trend direction. Okay, so we want to be following the gold. Very important. Each day have you check for red flags, and I recommend you write that down in your trading book, so as you're taking notes as you trade, if there is a red flag news announcement, that you remind yourself it's coming up. I follow the gold. If the 8 is under the 34 EMA, I'm only looking for shorts. If it's above, I'm only looking for longs. There is a rule that breaks that is, if you're trading an 89B or a 200B, you'll find that the 8 is well above the 34, but you may be going short. So there are exceptions to the rule, but generally speaking, you want to see the 8 under for shorts and the 8 above for longs. What are the candles and EMAs on the anchor chart telling me? You've got to follow the long-term stochastic, which I'm going to be showing you in a moment. Do I have a trending 34 EMA? Of course, if you're trading 34 bounces and any trend trades and flags, which we're going to talk about in a moment, of course we want to make sure that we've got that trending. Is the 8 EMA above or below? I'm just sort of repeating that from the point above there. Do I have a T1? Do I have a T7? Are these the key setups that you're interested in? Put these on your one-page cheat sheet. Do I have a 34B, 89B? Do I have a flag? Follow the long-term stochastic. Trade in the direction of a long-term stochastic, which we'll talk about. Drawing bull and bear flags. Now remember, bull and bear flags, traders, are a trend continuation setup, and as we look at the charts in a moment, you'll soon discover that basically the T1, the T2, many of our setups are just entry points off a bull or bear flag. And the reason I've been thinking recently, how can I simplify the setups, or how can I make them more visual, or give you let me put it another way, perhaps an earlier heads up that they're setting up. And a bull and bear flag, which we'll look at in a moment, will do that for you. What's the long-term stochastic even on the anchor chart telling me? Because overall, unless we're trading counter trend, we want to be trading with the long-term trend. Okay, let's see, the ideal divergence is when I have two hills or two humps. T20s are great after a divergence or a T3. That is a mean reversion trade. When you've had an extreme move and the market snaps back, T20s are more likely to come off. When you're in chop, you can get a lot of false T20s. Likewise, you can trading T20s with trend continuation works really well. So let's go to the charts and have a look at this. So what we're looking at here is the CL233 tick, and this is from my colleagues in the US. Actually, I think it's probably after midnight now, so this is from the 8th of the 2nd, 8th of February 2017, and we can see the time stamped Eastern Standard, or it might be exchange time, sorry, 6:18 AM. So let's just go through a couple of comments here. You want to keep it simple. Now, you'll quite often see on my charts, I'll have my floor pivots there. I'll have plotted the round numbers for the CL, and one of the challenges with that is that 50% of the time on with round numbers, you'll punch straight through, and other times you'll bounce off them. So it can be very frustrating at times, and keeping it simple can sometimes be really it's the best formula. So if the 8 is above the 34, we're looking for longs. If the 8's below, we're looking for shorts. Longs, shorts. Okay, so keeping it simple. Now, I mentioned there are some exceptions to the rule, such as when you come down for an 89 bounce. So you can see here the 8 is crossed under the 34, you've got an 89. So there are exceptions, but also there are exceptions when you take 89 bounces or take these trades. Always keep in mind, if ever you have a bounce straight after a major divergence trade or a double top, etc., a lot of these will fail. Okay, a lot of these will fail, so just be very cautious. So we'll come back to that. So where is the 8 EMA? The other thing here is, what is the long-term stochastic telling me? So if we look down here on my long-term stochastic, we can see it's been overbought. We're now looking for shorts. We've got here, of course, a T10 setup. Long-term stochastics down, short-terms come up, kicked over. Okay, and that is off a double top. So we're looking for shorts at this stage here, still looking for shorts. Now we're starting to kick up, we're looking for longs. We can see here the short terms come down and kicked up. So what we also have here, and perhaps let me just mark these up, we have a T20. Okay, we can see where the 8 is crossed through the 34. We've got a T20, we have a T20. Now we've got a fairly strong move here, and the T20-1, remember the T20 is when you first get you cross through. Your T20-1 is the first trade that comes through, comes up and bounces off your 34. So you've gone up, that's a T20-1. It can be any type of setup, maybe a T1, it may be a T2, a T18, but all it is really you've punched through, and it's your first trade that comes up and confirms the trend or the continuation, even if it's only for the short term. So we've got a T20, we've come down. Now there's a couple of things you may do. You may even decide that you've had a couple of green candles, so it's gone back up and tested it. The market hasn't liked it, the sellers have won, and the market's fallen away. So there is effectively a T20-1 there. You may even want to say this is your T20-1, but just go back and mark these up. But where I like to see these is after you've had an extreme move. Okay, so this has come off, this one's come off divergence, this one's come off basically a T3. I haven't got my anchor chart on display, but you'll see very clearly this is a T3. There's no divergence, but it's come off a very strong run-up. So the next thing is, as an early heads up, do I have a flag? Now if you study chart patterns, bull flags and bear flags are nothing more than trend continuations. So what can give you an early heads up? Now one of the rules traditionally is with a bull flag or a bear flag is that you have a minimum of 3 candles pulling back. So let's just perhaps have a look at some here. So let's just have a look here. You've got basically a very small flag here. Now what a lot of the technicians like to do is to draw a parallel line, and let me just disable this so I can pull this down for you. Sorry, just take a sec. So I've just got to change something here for you so I can drag this down. So we can see here we've got a little flag formation. Okay, and what we're going to do is buy the break of this little flag. Now traditionally you'll probably see many of these, and I prefer to see it where we've come under the 8 EMA. So I like to see a close back above the 8 EMA, but for our scalpers this works well. So if we look at this here, we've got a little flag here. I like to as I mentioned, do a parallel line. If you want to have a look at that, there is your little flag. So you're going to buy, okay, the close of this candle when you close above the 8. Okay, and that was good for 5 or 6 ticks, that was good for 7, 8, 9 ticks, etc. Now what these also do is give you though an early heads up. So if we look down here at your T2, Okay, if you look at that there, it's basically a flag pattern. It's going to give you, so when you start to see 3 candles or more pull back, you may choose to draw in a little trend line. I'm just looking at ways of trying to simplify your entries for you and to make them more obvious. So so these are of course are our bull flags. Then you want to look for your bears. So we've got one over here. Okay, so we come here and let me just do a parallel line for you. Okay, and you can see there's your little flag. So we're selling the break of this flag. Now then we come up to this further move here. We don't have any flags, so you got a straight T20. You can see here you had a 200B. Now if you looked on your anchor chart, you'd see almost definitely this, and actually let's just have a look and see if that to be true. And there it is true. There is your 89 bounce. So the 200B is an 89 bounce on your anchor chart. Let's just expand this back again. We've gone up, we've got a close back down here, and then we've got a T20. So where is my next flag? Okay, so I've had 3 candles pull back. There's no real need to do a parallel line, but if you want to, some technicians just like to have their lines drawn in. There it is there, and you're going to sell the break of the 8. Just be aware of these big candles, but of course with CL we'll see big moves. Now one of the reasons you'll see violent moves quite often is you've got a lot of technical based traders trading these as well. They'll trade the break of the 8. They'll trade the second, or the rule of 2, or the second or third close. And that's why on a T1 you'll quite often, because we rely that to plot either on the third lowest close or a tick below the second candle, quite often you'll see a really quick move because you've got so many traders, smaller traders particularly in CL, that'll use market orders at these points. They're seeing what you're seeing. But the point here with the flag is that it's an early signal that many of our setups require a 2 to 5 6 candle pullback. So when you start to see this happen, it's a heads up that you're going to get an entry or a possible entry. So do I have a flag? Minimum of 3 candles ideally. Now back down here, if we're looking for shorts here, we can see here that the long-term stochastic is heading down. All right, so I'm looking for shorts, and we can see here then the 8 crosses through. You've got there a T10. Now ideally, by the way, with a T10 I prefer to see it as a lower high. So I prefer a T10 to be a lower high, to be down here, but you'll see they do work off T7s, off your double tops and double bottoms. So we're looking for shorts. We just touched the oversold area. We started to roll back up, so I'm looking for longs now, and here is a really nice T10. So you can see here that my long-term stochastics moved up, my short terms come down, and of course remember this is a 2 smooth, so I've got 2 lines. Your double stochastic is your 2 lines. You're just waiting for that crossover. I'm looking for longs, and it coincided perfectly there with the T20 at the same time. Here we've gone over here. This is sort of, you could have taken this one here and your little roll over there. You can see my long-term stochastics come off the high here, my short terms come up, rolled over, and here is my entry right there. Okay, or you may choose to wait a little longer, which is almost forming a T2. Okay, and there's of course we've got our 34 B's. Now if you're going to wait, and if you want to be extremely conservative and take very high probability trades, only take a trade when both the anchor chart and the entry chart EMAs all confirm the trend direction. That is, you'll get conflicting mixed signals in these sorts of areas. What you want to be doing, of course, is looking for areas like this. Okay, so if we move along here a little, and so we're moving down, okay, and this is let me just fix this up so I can get pointer tracking. Hopefully it'll come up. Yes, there we go. So what we can see on the here, we've had our T20 and we can see everything starting to head down, and if we look over here we can see the 8 has crossed through. Sorry about this, my phone, let me just all right, gee, when it always happens, doesn't it, when you forget to turn your phone off. So we can see here that the on my anchor, everything's heading down. We're under the 200. The 8 is now coming under the 34. You can just see, and of course you'd only be seeing that. Actually, let me try to, if I move it over, it's going to throw all of this out, but you'd be able to see your 89s heading down as well. So this is a golden area, but what it also means, traders, is you need to be patient. Okay, so if we then look at here, we've got an 89 bounce. Now we already know that when we've got an 89 bounce, we're going to be having a 34 bounce on the anchor chart. So once again, this is a 233 and a 610. I know it's not exactly 3 times higher, but it's working on fib numbers, and you can see here they still work really well. So we've got here an 89 200 bounce, close under the 8, and we're in. Up here we've got, basically it's as good as an 89 bounce. It's within 1 tick, close under the 8, and we're in. Okay, so these are very simple trades, but what are they also, traders? Getting back to my comment, is if you've got a 3 to 5 candle pullback, just start to draw in your little trend lines. Okay, they won't work all the time, but it just gives you an idea. I'm looking for the lows here, extend that, and visually, when you start to get into the habit, you know, I personally am just looking for closes under the 8, so that works for me. But when you're sitting here and okay, I've got 3 candles, okay, let me draw a trend line in. Okay, what I'm looking for is a break of the trend line and a break under the 8, or the opposite. Okay, that is a break above the trend line if I'm looking for longs, and above the 8, and I'm in. And of course, where this works even better is when you're looking at this happening on your anchor chart. Okay, so let's just perhaps look at one more setup here, and we'll finish this video. We're going into 16-17 minutes. Okay, what have I got here? I've got a T20. We can see that there. Now, where would we classify as a T20-1? Well, first of all, we've had a really good move down. So you've had nearly a couple of failed T20s, very close. Now remember, when you've had a number of failed T20s or near failed, what does that mean to our probabilities? The probabilities are increasing, of course, that we're going to have a T20 that comes off, particularly when we start to get these little bubble formations. So we've then come down, we've had 3 or 4 bounces off the 34 and 89, which means you want to be cautious. We're starting to get more and more action above the MACD. So I've got a T20. Now what if you wanted to be conservative? Well, you can be conservative on these by waiting for a confirmation, such as your first pullback or your first T1. So where may that be? Well, if you look at this here, you've had a candle, you've gone up, you've got a little bounce on the 200, then you've got a reversal candle. Okay, there is a possibility, or you may choose to wait a little longer and to perhaps look at an entry here. So we've come down, and that is really, it's not an ideal flag. Why is not? Because if you really look at that there, it's really only a 2 candle pullback. Technically speaking, bull and bear flags, you're looking at a 3 candle pullback. But getting used to these, okay, you see a couple of candles pullback, okay, there it is there. So traders, hopefully this just may make this a little easier for you. Now what I've done here is, and you'll see just why I've got this here, is that pivot bounces, that's a floor pivot right up there, work beautifully. What we also have here, of course, for our technicians, we've got there a nice divergence trade setting up. Then we can see here our long-term stochastic has fallen. What are we now starting to look for, traders? We're looking for shorts. What I also have is something that I call a T9. Whoops, let me just get this right for you. And we've actually had 2 of those. Now, as a quick reminder, and I will wrap this video up, a T9 is quite often sets up as a T10 or very close. It's nothing more than the first T1 the plots, that is where I've had a big enough pullback, okay, where I'll then get a T1, which is a visual plot for me. So remember, with a T10, you're working on the stochastic pulling down. Okay, with a T9, I want to see a T1 plot. Okay, so you can see here I've had one plot there, and what that basically is your first decent pullback, a confirmation pullback. Okay, so it's come down, you've had a pullback, been sufficient enough to then have the T1 plot, and away we go. Once again, these are the danger areas. Okay, when you start to see all of your EMAs going sideways, and that is where you may, and this is where you can be chopped up on your T20s. Okay, so this is where, okay, I've got a T20 now, it's chop city here, we've now come through, I've broken below the 200, I've now got to I've come up, almost hit the 34, I've now got to close back under the 8. What is that? That's a T20-1. okay, and if we looked over and we'd see, and let me just do this for you, hopefully if I can just pull this over for you, we could see here that at this point here you'd had a big sell-off on the anchor chart, and notice how all the EMAs at that point right there are falling. Whoops, there it is there. So it's all falling, so everything is heading down. So traders, hopefully this has given you some tips and ideas to work with. Thank you.